Our targeted topic today is the backdrop. My name is Jamie Mullen, and I'm a Senior Benefits Specialist here at Empers. If at any time throughout your career you have questions about your Empers-sponsored benefits, you can contact a benefits specialist at the email address provided. The backdrop is a payment option that eligible members of the closed plan and the year 2000 plan can choose at the time of retirement. Simply put, the backdrop option allows you to receive a lump sum of money at the time of retirement in addition to an ongoing monthly benefit. Typically speaking, the backdrop is a trade-off. Normally, although not always, when you elect the backdrop, you will receive a lower ongoing monthly retirement benefit in exchange for the lump sum of money right away. With that in mind, let's break down the backdrop option in greater detail. Here's what we're going to take a look at: eligibility for the backdrop, calculating the backdrop distribution options, as well as other important considerations. Eligibility for the backdrop. Eligibility is straightforward. First, you must be a member of the closed plan or the year 2000 plan. Members of the 2011 tier are not eligible for the backdrop. And second, you must work at least 2 years past your first eligible normal retirement date in order to have backdrop as an option when you retire. Calculating the backdrop. Calculating the backdrop involves figuring out what your retirement benefit would have been had you retired on an earlier date. Let's say that you have reached your first eligible normal retirement date. You then continue to work at least 2 more years beyond normal retirement eligibility. Then, at some point, you finally decide to retire. If you choose the backdrop, you are choosing to have your retirement benefit calculated as of an earlier date and time. This is known as your backdrop date. The backdrop is a lump sum of money that is equal to 90% of all the retirement benefits that you would have received had you actually retired on your backdrop date. Included in the lump sum is credit for unused sick leave, as well as annual cost of living allowances. Then, as a trade-off, your ongoing monthly retirement benefit will be based on your service and average salary as of your backdrop date, not your actual retirement date. In other words, when you take the backdrop, your retirement benefit is calculated with less service and potentially a lower average salary in exchange for that lump sum of money right away. The backdrop period represents the length of time between your backdrop date and your actual retirement date. You can choose a backdrop period in 1-year increments ranging from the total number of years and months that you have worked beyond normal retirement eligibility up to a maximum of 5 years. To demonstrate, let's say that you became eligible to retire on July 1 of 2018 and that you continued to work until January 1 of 2022. In this scenario, you would have the following choices available to you. No backdrop, in which case your ongoing monthly retirement benefit would be calculated taking into account all of your service and salary up to your retirement date. A 1-year backdrop, in which case your service and salary as of January 1 of 2021 would be used. A 2-year backdrop, in which case your service and salary of January 1 of 2020 would be used. A 3-year backdrop, in which case your service and salary as of January 1 of 2019 would be used. Or 3 years and 6 months of backdrop, which represents the total amount of time between your retirement date and your eligibility date. Now, let's put some numbers to this in order to demonstrate a very basic backdrop scenario. Here we have someone who actually retired on January 1 of 2022, although they became eligible to retire on July 1 of 2018. As of January 1 of 2022, they had 25 years of service and an average salary of $3,500 per month. If they elect no backdrop, using the year 2000 plan retirement benefit formula as an example, their monthly retirement benefit would be $1,488. That's not including the temporary benefit if they're eligible for it. For simplicity's sake, let's say they're struggling with the decision to take no backdrop at all or the full 3 years and 6 months of backdrop that's available to them. As of July 1 of 2018, when they first became eligible for normal retirement, they had 21 years and 6 months of service and an average salary of $3,000 per month. If they elect BackDROP, again assuming no temporary benefit, and further assuming an average annual COLA during the BackDROP period of 1.5%, then their lump sum BackDROP would be $42,254, and their ongoing monthly retirement benefit would be $1,147. Again, we have a trade-off. Essentially, in this particular example, they'd be giving up roughly $340 per month in ongoing monthly retirement benefits in exchange for that $42,254 right away. To assist you in your decision making, Empress has a tool available to you called the Comparator. Among other things, the Comparator helps you to project your benefit payment stream over the course of your life with or without BackDROP. To access the Comparator, you must click the My Empress Login button. That's currently located in the upper right-hand corner of our homepage, empress.org. From there, you log into your secure account. Once you're logged in, you'll find the Comparator under the Forms section. Let's switch gears now to BackDROP distribution options. Now, let's say that you've looked very closely at your situation and you've decided that BackDROP is a good option for you. Then, what you choose to do with that lump sum of money becomes a very important decision. You have the following options available to you for receiving your BackDROP. The first option is a rollover. You can roll over your BackDROP to a traditional IRA or to an eligible employer-sponsored plan. When you do a rollover, that money is tax deferred. There are no tax implications on the rollover itself. Eventually, when you start to pull the money out of the plan that you rolled it over to, that's when you'll pay taxes on that money. You can also roll over your BackDROP to a Roth IRA. However, there are tax implications when rolling over to a Roth account. The second option is cash. When you take cash, you can either decide to receive it in one lump sum right away at the time of retirement, or you can spread the payments out over 3 annual installments. When you take the BackDROP in cash, that money is taxed immediately, the year in which you receive it. Empress is required to withhold 20% for federal tax. Empress does not withhold for state tax, although you may owe state tax when taking the BackDROP in cash. There is also a potential 10% early distribution penalty assessed by the IRS unless an exception applies. If you are considering taking BackDROP in cash, please contact Empress to discuss the tax implications and potential early distribution penalty in greater detail. The third option is simply to do a combination of cash and rollover. Other considerations. A word of caution. Deciding whether or not to elect the BackDROP is a major life decision that is irrevocable. Do not base your decision solely on the information depicted in this presentation. There are a number of factors to consider, such as age and life expectancy, the time value of money, and taxes, just to name a few. As always, we recommend that you consult a qualified professional when making complex financial decisions. More detailed information regarding the BackDROP can be found in the Closed Plan Retirement Handbook, as well as the Year 2000 Plan Retirement Handbook. You can view the handbook under the Publications section of our website, empress.org. Also through our website, be sure to register for access to your personalized benefit information via the My Empress login. Your My Empress account is now easily accessible with your phone or tablet. This has been a very basic, high-level discussion of this particular topic. We realize everyone's situation may be different, so we encourage you to contact a benefit specialist to discuss your situation in detail. We appreciate you taking a few minutes to learn more about your benefits through Empress. Remember to check back periodically, as we will be adding additional targeted topic presentations. Thank you.